Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am the FOMO Charts. Today is Friday, August 7, 2026. It's actually very early morning. It's 1 o'clock in the morning, AM, Friday Eastern Standard Time. Let's talk about next week earnings releases, what's coming out for earnings. We have earnings from companies such as Rocket Lab, ASTS, HIMS, Archer, Aviation, Plug Power, QUBT, Lumentum, CoreWeave, SMCI, Cisco, Nebius, ONDS, and Lunar as well. Economic data next week, we have CPI, Core CPI, PPI, Core PPI. Very important still. Unemployment claims, retail sales, consumer sentiment, and inflation expectations as well. A lot of recent news this past week was very volatile. However, USA stock market earnings season is mostly over. More than 75% of the companies in the S&P 500 index have completed reported earnings, so they finished. Also, today, President Trump signed an executive order to impose 15% tariffs on imported products made from polysilicon. That's a material for semiconductors and solar panels. For earnings, SpaceX reported better than expected EPS and revenue, and they also revealed a hint of their yearly roadmap and milestones they need to achieve as a company. SpaceX also announced a deal to use NVIDIA chips exclusively. The next day, AMD reported better than expected EPS and revenue, but capital expenditures increased significantly for AMD. Today, AMD announced that they acquired Thales AI. SanDisk, the following day, reported better than expected EPS and revenue. However, their forecast for fiscal Q1 2027 revenue was lower than analyst estimates, and so the stock fell. Price went down. Google announced AI leadership division changes, including departure of key personnel. So the market was quite volatile, but as traders, that's what we need. So let's look at SPY S&P 500. This might be a shorter video today. Also, I'm taking the day off for Friday. My trading week is done, so I don't have to do any trading. That's why I'm making this video. Thanks for watching. SPY S&P 500, after we had this breakout above 755, the rally, this was almost like a short squeeze all the way up to 775. And in terms of volatility, we were outside of that Bollinger Band up here. And so I ended up shorting on Wednesday and Thursday in futures and had green trades. So this is what I'm talking about is in terms of algorithmic trading or technical analysis backtesting is sometimes when we get these lower Bollinger Band crosses for an index like S&P 500 or NASDAQ, sometimes it rallies up to the upper Bollinger Band. So this is a real trading strategy. It does not always work, but when it does, it's almost predictable. So for me, I was trading in this middle spot of the rally. We can see we went from Bollinger Band and oversold conditions to reversion to the mean right here in that 20 EMA. And then when it gets overbought up here, the upper Bollinger Band cross, then there's a small sell-off. It does not mean it's over. So now I'm just playing support and resistance in these lines. Support, support, resistance. So I'm playing between 776 and the gap up of 760. And just taking it easy. I don't have to push so hard right now through earnings. Honestly, the best setups just come with patience. I'm just waiting for a great setup on the charts. So NASDAQ QQQ, we broke out of that triangle and it was actually descending wedge. And we can see we had that flash oversold crash. Also Bollinger Band. We opened up the oscillators. Not quite RSI oversold on a 4 hour, on a daily, but it was oversold on the 4 hour. On the QQQ stock RSI, stochastic RSI, it was oversold, so that's enough just on a daily level to try to play a reversal. And we hit that reversion to the mean. Almost poked out. It's correlated with earnings as well. Not quite a Bollinger Band, not quite a linear regression cross, but it went to the top of that resistance. So this was support to resistance play. And the resistance 726, support is 707. And it's unlikely to crash severe unless a lot of stocks have to downtrend, which we'll look at. Dow Jones got a little too excited here. Dow Jones, short squeeze. I think people looking at this downtrend were thinking, oh, we're just going to have a market crash. But like I said in past videos, sometimes this consolidation into EMAs is actually a bullish pattern. It could be bullish continuation because technically we're still in this uptrend, not just because the EMAs are pointing that direction, but the price is still making higher highs and higher lows over time. It was kind of a scary head and shoulders, but usually when we have a head and shoulders very close to an EMA, I don't count that as real. If I saw a head and shoulders floating in the sky, then that's more real to me. But this looks just like consolidation. And usually when you have a 50 EMA or 20 EMA cross, it's been holding in this uptrend. Bollinger Band poke out, potential evening star triple candle pattern that I'm seeing on the daily chart here. So Dow Jones, a little bit more bearish sentiment. We had this reversal, short squeeze up, resistance 543, support 537, quite a bit of gap emptiness on the charts. If I use an 8 and a 21 EMA, it's still way above the 8 EMA. So this is a significant gap window above 535, and I think the short squeeze is the reason for that. Linear regression, we're approaching that average middle spot. So I'm just going to play levels here. Support and resistance. Don't overthink it too much. Don't try to predict it too much. But the weekly hammer turned around into a weekly shooting star, so the market is mixed. IWM, we also had that breakout where this would have been a more predictable downtrend if we had the break of support to the downside, 288 falling down to 283, but that did not happen. We can see on the charts we had multiple hammers, candles, above 288 holding that support, and then we had the trend line breakout. So that's actually that continuation pattern, but it's starting to sell off now. Let's just move ahead. I'm going to skip oil, gold for now because those are very news based. We had some nice breakouts and breakdowns. I'll just go straight to SMH. SMH, yes, we have this larger head and shoulders pattern that's remaining to play out. The neckline, it's back testing that exactly right now, 572.81. And it remains to be seen if this is going to reject, it's going to reject in August or September. If this is a real head and shoulders, it's not really perfect looking, but if we use Fibonacci, let's say we take this last AI run from end of March to middle of June, which was the top, we only really hit the 382 or 50% to 382. So I would say this hammer is actually giving confidence to this bounce, but we want to watch out that we're still technically in a downtrend, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So unless we clear 594, I'm a little bit skeptical. Yes, it did break out of the trend line. It could fall down to retest 530 and then try to bounce. So I'm being a little bit more cautious on SMH still. DRAM was very similar, fading severely to the downside, but DRAM actually hit its 618, bounced up to the 50%. And this is mostly just copying SNDK price action here. We can see there is room for another leg down. That's why I'm being cautious. I'm not seeing a double bottom or upside down head and shoulders. This could be, the best case scenario would be this is a higher low and then actually continues. Because when we look at companies like SNDK just had earnings. And so their EPS revenue was good, but that Q1 2027 revenue forecast was below analyst expectations. So we had a little bit of a sell-off. Not extreme, not as extreme as I thought. I thought we were going to crash more to like 1200, 1100 range, but the market held for now. So we can see we're still in the daily downtrend on SNDK. After we had a triple top, lower low, lower high, downtrend. So again, I'm looking for daily double bottom, upside down head and shoulders, higher low reversal. And if we use a big Fibonacci, we could use all-time high Fibonacci from the IPO start, the low of March 2025, all the way to June 2026. And the real areas of value, $1,000 and $750, $800. So $1,000 and $800. So I don't think it's really over this rally. It's just a matter of how can the earnings justify this price, especially because after we had a sell-off and then there's that Chinese company that's starting to make memory is, wait a second, how valuable is SNDK, right? We had the Samsung crash, SK Hynix crash. So if we retest 1,000, which was this 200 EMA, which happened to be a nice level bounce zone, or we get into a technical pattern because it's building. You can see here the squeeze in the large yellow, it's building, but we had the bounce. So if we pull back, that's actually okay. Let the squeeze bounce, SNDK come down, give us value, us meaning retail traders and investors, and we might actually come back to SNDK. Let's go to SpaceX, SPCX. All right, so SpaceX, this is actually maybe the first good sign that we've seen. I was listening to the earnings call. I was locked into the computer on Tuesday, watching for this earnings report, EPS revenue. I was listening to the earnings call, listen to the executives, listen to Elon Musk, what do you have to say, and the executives. And also I was watching YouTube, how certain retail traders and investors were reacting in a live streamer's live chat. So we are watching this very carefully. Now, in terms of the price, the first good thing I saw in a long time since the IPO is, okay, I like this potential double bottom at 108. That's the first good sign I've seen in the price because we've been in a massive downtrend on SpaceX for 2 months. It's been painful to watch, but I like this. We had this flash rally, and wait a second, is this going to turn into a weekly double bottom? It's not even ready yet. It's not ready yet. But if this is going to fall back down to 108, and then we might have a reversal, because why did it stop? It's very key to understand, this is just my personal opinion, that SpaceX, their roadmap and the milestones is going to obviously take time. On the earnings call, they said anywhere from up to 1, 2, up to 10 years. And they're building spaceships, they're doing Starlink, they're doing AI data center infrastructure, and also the goal is to get boots on the ground and robots and AI data centers built in factories and manufacturing on the moon. Not Mars, but the moon. So it's actually feasible, and it just remains to be seen. The most important thing is those earnings calls. I would say just my personal interpretation and opinion is that I think people will start to become more bullish when they could physically see. It's like a physical demo of, okay, we have this robot and or SpaceX has this robot, and this is how the data center is going to look. Even like a miniature or even a physical demo, like Tesla has car demos, so we're not getting like the SpaceX demo. I'm not talking about the spaceship, but talk about like robots and AI data centers, so people can actually physically see the products and what is it going to do, what's the benefit. Because even the analysts, some analysts on the call were not confused, but they're questioning and just really trying to analyze, okay, why do we need robots, or Can we unpack the earnings, like explain the earnings? So I think if the more transparent it becomes, the more people will believe. Because right now, I think most people are thinking, why do we even need to go to the moon when we could build it on Earth, or why do we even need it at all? So that's kind of the mindset that I can perceive from social media. But I'm a believer. I like Tesla products and SpaceX products, and I hope it actually happens in the next 5 to 10 years. But for now, in terms of the price, if we have a breakout above, let's get this trend line really tidy here. We just had the breakout. In terms of daily, we might be at the very, very early stages of a reversal here, because we had this downtrend. This is the first time we broke out of that large downtrend and pulled back. And this, if this is real double bottom, then okay, let's actually start an uptrend reversal, probably taking every 3 months. Today, I was watching the price very, very closely to see, okay, are people going to sell off? Are the employees going to sell off? The tripling of the float, yes, increased that volatility at 9:30 a.m. Eastern today, but is it going to capitulate SanDisk for negative 50%? I like this double bottom for now. We need to hold that 108 level, and we need to break above the pre-IPO level of 130, 135 to get people excited again. But this is the first early stages of potential reversal. Okay, let's do one more from the earnings. AMD, so after their earnings, it was volatile. It had a actually earnings shock, right? In that post-market negative 10, but then it kind of reversed here, 5% to the upside, which is good. So for now, AMD trying to kind of keep their company afloat, because we can see on the stock price, this like rounding top action is usually not really the greatest, but I understand because we went from $75 AMD. Does anybody remember that? In the tariff crash, I remember the day it tapped $75. My goodness, right? And now look at where we are after AI. We were at $500, $489. It's incredible. It's like 500% increase, right? But we can see usually when we get these rounding tops or double tops, it's really not the greatest spot. So the company makes sense why they're trying to really, really keep the earnings and the sentiment up, because it's possible they could keep rallying, but when you have 5%, 500% move, it gets more difficult. But I do want to point out that how I try to avoid the FOMO as a trader and investor, simply this: even without EMAs, we can see where is the relative value in the price when it gets really low after a crash, when we have pullbacks, when we have pullback consolidation breakout. That was a big one in April. So then when I see when we're consolidating at all-time highs for 2025-26, I don't really want to buy there. That's why you don't hear me say, oh, let's buy AMD or Intel. It's just because it already ran up so high. That's why I'm being very cautious. As an investor, I have to use the Warren Buffett mindset. It's not just about price. He does financial calculations, but for me, I just take a little bit of that influence of, well, if the price is very high and maybe this stock is overvalued, then perhaps I do not want to buy. Contrast that with SNDK, where it had a 50% discount, even though it's the most expensive stock basically in the stock market when it went 6,000%. But then from the top, we had a 50% flash discount in 2 months. So there was a little trading opportunity there. Or even Intel rewinding before it had this. I remember I first bought Intel at like $22. After that first breakout is like August 2025. So remember that day. But that's after we had massive discount crash and then consolidation sideways. We're holding that $20, it was $19 hold of the price, and then we finally had the breakout on the earnings news. So like this is my style. This is my strategy. I look for these types of corporations and companies. Sometimes it takes 1 or 2 years, but what's the reward for doing that? What's the reward for doing that? 300, 500, 1,000+ % potential on some of these companies. That's what the system is all about. My trading system, my style. So if somebody's a trader, though, a day trader, swing trader, I do want to point out my trading. So let's do 2 trades. And then I'll end with crypto. So I trade futures, and a lot of times I day trade minis and I swing trade micros sometimes. But I happen to day trade S&P 500 ES1 minis for about 2 days, 3 days sessions, and I had nice profit. So I'll just talk about my Wednesday and Thursday trades, and that's why I don't have to trade anymore. So basically on Wednesday, this was probably my best trade of this entire week. This is the top of the market in terms of the price. And so after we had such a 3-day short squeeze runner up on the price of making higher highs, higher lows, the key hint there was on Wednesday night when I closed my shorts in the post market, is I saw, wait, higher high, higher low. Is this going to be the start of reversal? We had that good news run up, and then because I've been studying the charts for so long and I knew that Bollinger Band is overbought, okay, perhaps we might drop today in a pullback, and it was actually a large drop in the price on Wednesday. So I skipped the actual 9:30, 6:30 play, 9:30 Eastern. And so once I saw they were chopping up and down, I'm like, okay, thinking the market's struggling to find direction, but knowing the daily chart was all-time high, once I saw the price made this lower high, I shorted at this exact spot. And the risk for me was, yeah, there's 5 to 10 point risk, which is pretty big, but I think I had a 4-point stop. And then market actually ran down 50 points or fell down 50 points, but I didn't hold it this entire time. I think I did 4 shorts. And it's beautiful when the market has a trend that's working in my direction, and 4 shorts, 1, 2, 3, and then this last one. And then I actually flipped long at the bottom, and it's not random. It's because there's a large MACD down there. And I don't think we hit a pivot. Let me see. No, we didn't hit the pivot, but there was a very particular signal. I want to make sure I tell people correctly. Yes, there's the 15-minute morning star, not a Bollinger Band oversold. So we could see that for 15 minutes, just red, red, red. Red, red, red. And then I even played this down, had a great flash crash. But then when I saw we had the morning star, that's when I flipped long. Yes, we had chop, and that was really annoying at the second half of the day, but people were really trading SanDisk and SpaceX at that time. So fast forward to the next day, I actually swing traded a short because of the SpaceX and SanDisk earnings were more negative. So I did not believe that we're actually going to go up. A very risky play, but it worked out in my favor. Market dropped another 20 to 40 points, and then I closed. Interesting that on Thursday today for futures trading, so I closed here, and this one was, I remember this one was the actual pivot close to the support level, so I closed that, and we were way below VWAP as well. It was quite oversold here, but those are not always reliable signals. And then what happened was, it was interesting that actually, full disclosure, I did not really notice we were double bottoming here because I was so short biased. So even for me, I need to make sure that I'm playing market structure and that I take moments throughout, maybe every hour or so, to redraw my support and resistance and trend lines, because that still matters. And sometimes if I'm in a line chart, it does not look so clear to me. So this is one where I remember vividly in the middle of the day today, like after lunch, I said, wait a second, are we not shorting down here anymore? We're finding SpaceX found a bottom. SanDisk is actually not crashing. Okay, I mean, we're not crashing today. Then I remember vividly saying, wait a second, I need to make sure don't become too biased. So I said, all right, let me just draw support and resistance. I turned off all my indicators because I don't need those. And I said, wait a second, I know. Traders, we are trading market structure of the price. I'm not trading the indicators. All I needed to do is trade the price. So I drew this support, I drew this resistance, and I said, oh, we're going long here. Then we went long. Then I noticed, oh, we're actually double topping below 770, 77.44. And then that's where I had a success today. In the beginning of the day, there's kind of weird chop for me. And then I shorted the end of the day and I locked in, shorted that, had some really wonderful shorts here. Also, there is this trend line. So you can see how my mind works. Support, resistance, draw the trend. We're doing price structure here. So I shorted this exact top right here because I said, well, it's trend line top. We're not quite here at the pivot point, but there is some EMA resistance a little bit right here on that 15-minute, 5-minute. And I said, okay, if I'm going to end this day, I'm going to short this down at the resistance spot, trendline resistance. There's also horizontal resistance. Then I had wonderful shorts at the end of the day, and then I closed. And then I said, okay, that was basically almost a perfect day, except for not catching the double bottom right at the exact bottom right here. Remember, at this exact candle. So even for me, I need to just keep charting. Charting is more important than trading. And even for me, I need to control myself. Don't overtrade, don't over leverage, keep charting, market structure, price patterns, price setups, chart setups. If there's nothing, just take a break and walk away. Or if I'm day trading, just close all my positions, log off, do something else, come back hours later after market close, chart, swing trade, prep, etc. So a really good trading. I'll do one more. And honestly, I don't really want to talk about crypto so much because I'm not trading crypto as much. We'll do one more. There's this penny stock basically that had a gap up. I think it was INLF. I think this is on Wednesday, and it was a day trade. I don't usually like to trade penny stocks, but yes, right here. So this happened on Wednesday, right after market opened. And again, full disclosure, I do not recommend trading penny stocks. I believe penny stocks is for like advanced day traders because there's so much volatility. People can lose all of their money because it looks good on a chart, but it can crash negative 25, negative 50%, or in after a day or two, it could crash negative 90%, right? And people can lose all their money and their stock halts. It's actually very dangerous. It's probably the most dangerous type of stock trading possible. But for me, I'm saying, okay, I sometimes look at penny stocks just in case there's like a asymmetric opportunity. And I noticed, wait a second, there's this double bottom. So I'm thinking, okay, well, if I'm going to play this, there's a double bottom on the chart right in front of me. Okay, so I longed it. And I think on a 2-minute, it was actually like an upside down head and shoulders, 3-minute. So we can see there's like a visual setup for me. It's not a double top. I'm not chasing highs. I remember saying, oh, there's a head and shoulders. I'm going to buy this. So I remember I entered here and I had a pretty tight stop, 5% stop. It almost kicked me out. It almost actually was this candle. So I had like a 7%, 8% stop. I almost got waked out on this. So next time I have to have a bigger stop loss, probably shrink my position size because this is a penny stock. The ATR is 3 cents. So 6 cents, that's 10%. Double the ATR is 10% stop loss. And I took this trade, but I think I sold halfway. I sold like too early. So I think what I should have done is, this is still like one of my biggest winning trades for the week, and why I don't have to work tomorrow is that 20%, I have this profit, but I probably could have sold half and then trailed the rest because this actually gapped up 50%. I mean, rallied 50%. And then we had the crash. So here is the advice for myself is I see the pattern. I targeted 20% because this is a 10% price structure. I targeted 20% and I just exited. I could have played it up until this lower high and then got out of there. But then I remember it crashed and had like a stall halt. Other penny stocks had stall halt. And then it faded for the rest of the day. And it's important to note, you might say, wait a second, no FOMO charts. There's actually a second pattern. And there was a second pattern. There was this, almost we had this upside down head and shoulders. But I was talking to my colleague at the end of that day, this is a failed rally. I actually tried to trade this and then I got stopped out. I'm like, okay, I had nice profit and then small stop on. I said, I'm done with this day trade. There's nothing here. And the key is the volume, because in the morning time, look at this above. We have this, talking to myself here, we have this large above average volume that suddenly happened, right? We compare this volume to the end of day volume. There's almost nothing here. There's less than 150K volume. At least in the morning, it's like a million volume. So 10 times more volume. Our vol matters. This is not, the second trade was not important. I didn't even have to take that trade and I could have had a nicer week, right? So really important. This is like the real nuts and bolts, the real details of trading. And I do not recommend penny stocks though. Easiest way to blow up and lose money. I don't even really recommend futures either because leverage. The easiest thing I recommend is just vanilla plain 1x ETFs. SPY, QQQ, Dow Jones, DIA, IWM. And that's probably the cleanest way, the easiest way to manage risk is just use these 4 ETFs and just buying at really good chart setups. And it takes patience. In a whole year, we just had a massive upside down head and shoulders. So this was more kind of earnings related, but this is a buy signal. Upside down head and shoulders. And if somebody happened to long that or even just missed it and longed it from the gap up, then the stop is the window down here. And then just having a 2%, 3% stop loss and just leaving it there, rallied all the way up to where we are now, 14% profit. So what was that? That's a 4-to-1, 4.4-to-1 trade, reward to risk. That's what I'm talking about. Is it only took us this year 4 months to hit that S&P 10% annualized return average, but this is assuming somebody would put all in with a stop loss, which most people are not doing that. But this is like my style of trading is I just keep waiting till I see a setup and then I buy. And then the only hard part is, well, when am I going to exit? And it's nice to be in profit to have that decision. It's not about chasing or chasing so many penny stocks. It's just I'm already in profit. Then all I have to do is just manage the money, meaning I have to just slowly move my stop loss up slowly, not too close, but slowly move it up. And then I'm basically guaranteed profit. Sleep well at night. All right, let's go to crypto. And we're going to end here. This is a very long video, but I don't usually talk about my trades, but today, because the market's so volatile this week, I want to share that. Hope that helps somebody out there. Because I remember when I first started, market was so confusing to me. And I remember I had to study and practice a lot to get to this level that we're at now. Total crypto market cap. So total crypto is pretty quiet right now because SpaceX and AI is taking over the news. But if I'm looking as an investor again, from investor mindset, it's not ready to go up in the price. We are still downtrending. Yes, that bullish divergence on the weekly is building, but now we can see, okay, I see another squeeze, another momentum forming. Technically, we're still in this DMI down here at the bottom. It's a red indicator, meaning we're still in the downtrend. This is not a green DMI uptrend scenario. So just copying that formula of, okay, are we going to up cross on the yellow and the red? EMA is 50 EMA, 200 EMA on a weekly, and have a DMI cross. That's one of my strategies. And it doesn't matter what the RSI says in that time. It's cancel the oscillators when that happens, and then we're going green when that happens. I will tell people when that happens. on my stream. But because that's not happening, that's why you hear me, I'm avoiding crypto right now on purpose, because I know from experience and from profits and losses in the past that if I try to keep trading on a downtrend, it's basically pointless for me as a bull long. I need to just wait for the big higher low and then enter there. Efficiency with capital. And I don't have to work so hard at crypto. But I believe in crypto. I love crypto. I started in crypto in my career. So BTC, Bitcoin, USD, we can see we still have that higher low and the squeeze and the momentum. And so we have this nice RSI higher low, but then the DMI is also in a red cross and we're in a downtrend on the weekly. So we just got to wait here for Bitcoin, hold the support at 59,000, 65,000 is our resistance, and it's still technically in a downtrend. When we see higher highs and higher lows, I will tell people on the stream, and then it's up to everybody to make their own decision in their life and their account of what to do at that spot. But as a technical analyst, we're actually below the Turner EMA. That's a danger zone in terms of trying to long, because sometimes we get those flash capitulation crashes, meaning it's dangerous to try to predict where the bottom is. Once the bottom reveals itself to us, most analysts will start to talk about that and examine that. So Ethereum USD, we had that weekly death cross. Watch out for that. And we're below, we have not had a weekly death cross on this chart ever. So this is significant for a Coinbase chart. And there might be other charts, but we can see the weekly still at kind of high stochastic RSI. That's not really good. The really best spots to buy, lower stochastic RSI. It just means that there's some kind of dip opportunity. So that I use stochastic RSI in the daily, and this is like a strategy hint, just so I don't have to keep looking at hourly and 4-hour charts. I just know, open it and say, oh, we're low here. That probably means on a 4-hour or somewhere, there's like a lower RSI spot somewhere on that hourly. Hard to show here. Or on the price, that happened to be the low zone, right? So it just gives me a little hint. I don't always enter on it. It's just a little hint indicator. But what I like about Ethereum is, okay, it's trying to hold the DMI in this green zone, but we need to hold above 1550, definitely hold above 1700. And until we get some kind of turnaround in the uptrend, and I just sound like a broken record. It's because it's true. Until we get the uptrend reversal, people are not going to come back to crypto. Same thing with XRP. We're still fading down here. XRP fading down, and now I'm just waiting for the big bottom of the price. If we lose the 786, we're probably going to 75 cents. XRP probably going to 50 cents, 33 cents. Finally, for Solana, with that weekly death cross. Solana under pressure right now. It's really subtle, but it's there. I mean, we had most of the setup of the sell-off has happened already. 69% down, so I'm expecting, okay, maybe 20% to 30% more down. So perhaps a relative bottom might be $40 zone for Solana. And also we have those crypto ETFs I was talking about last week from Grayscale ETFs, but until we have a green up cross, right, we can see it. This is like the setup I'm looking for. Out of a downtrend, we have the higher low and we're going sideways. Then once we get that DMI up cross on a weekly, that's like a big hint. After my studies, that's what I noticed. On a weekly DMI uptrend, that's kind of like the start of the mega rally. We're getting in way before other people, and then all we have to do is sell at the top to those people. And how do we know it's a top? Well, usually when we have some kind of double top or a triple top, and then just get out of there, sell, sell, sell. So right now we are not seeing that at all on the charts. That's why. The sad reality of crypto is right now less important than AI and robotics. AI and robotics is more important. Crypto and meme coins are not so important in our daily lives anymore. It's kind of wild to see the industry flip around in 2 to 4 years, but that's what's happening. So all we have to do is just play support, resistance, and trend, and just have patience for myself. And just manage risk. Don't blow up while we're waiting accounts. Don't overtrade. Don't over leverage. And skip trades. If I have a profitable week, just relax and then come back to the charts. That's all I'm going to do this weekend. So thank you. Hope you have a nice week. And I will see you in the next video next weekend. Thank you for watching. If you like this video, consider clicking like and subscribe. See you next time.